Hey everybody, this is Sean Price with the Price and Price Group of Samson Properties here with this week's market report. As you can see, I'm flying solo today. It's been a crazy weekend, so I'm actually shooting the market report from here in the car, but I wanted to get these statistics out to you and this information out to you because I feel like it's really important. So we're going to dive into the market snapshot, which is the what's happened in the last 7 days in the Northern Virginia real estate market in under 5 minutes. And then we're going to dive into the month-over-month report for September of 2024 versus September of 2023. So first, let's dive into market snapshot and see what we've got going on. All right, so as always, we've got our orange line, which is our buyer activity, and then we have our blue line, which is our inventory. You can see that buyer activity decreased significantly this last 7 days. And I feel like that's in response to the sharp decline in inventory that's been happening. And then inventory also continued to decrease because buyer activity tends to follow inventory for the most part. So what ended up happening was we can see that this gap was actually lessened quite a bit. So we go over here to our seller's market versus our buyer's market. Seller's market is anything above the blue line. Buyer's market is anything below the blue line. Seller's market meaning that demand is higher than supply. And so you can see the demand is still higher than supply, but we did decrease in the strength of that seller's market a little bit just because of the decrease in that difference between the supply versus demand. So what we're seeing is the market, the strength of the seller's market is softening a little bit. It has been for quite some time. We saw it starting picking up again, so it's really kind of hit or miss with the properties. You know, we had a property that we looked at that was around 1.7 million, went under contract in 2 days. And then we had another property that was at 940,000, and our buyer was able to get into it about $25,000 or $20,000 under the asking price with an inspection contingency. So it's really hit or miss on the properties. Sellers, it's still a good time for you to sell because you are still getting top market value, but it's got to be priced accurate. You're getting top market value. Prices are not coming down, but it's got to be priced appropriately because the buyers have choices now. So the buyers aren't going to walk into your property and overpay for it unless you've got it priced right so that you can get the number of buyers in there to create that bidding war. Buyers, for you, make sure that the realtor that you're working with really knows the numbers and really knows how to look at these properties. Buyers, make sure you're working with agents that know how to get you the value of the properties. Sellers, make sure that you're working with an agent that knows how to advise you on how to prep the property. All right, if you guys have any questions, please feel free to let us know. And again, Kelly and Tatiana will be back next week, and we will be back with next week's snapshot. Okay, so now we're going to dive into the September month-over-month statistics. And again, the reason we do this is because we do our weekly snapshot because that lets you have the information that you need to make real-time decisions. When we're looking, so in our weekly snapshot, we're looking at data which is new homes that came to the market, not new homes, but homes that are new to the market that just came on in the last 7 days, and the number of contracts that happened in that 7 days. So the number of homes that came off the market, so that we can determine what the supply and demand is in that 7-day period, so we can know how to make decisions appropriately. This monthly snapshot, our monthly market report, we're actually looking at the monthly sold data. So we're looking at the lagging measures. And the reason that's important is because when we're looking at the numbers for September closes, those properties probably went into under contract in, it could have been July, it could have been August. So that date is at least 30 days old usually. Sometimes it can be as high as 45 days old, depending on, and then if it takes a couple weeks for the information to get out to you, it could be even 60 days old. So this information that we're going to go over in this report is good for seeing the big picture of what the market is trending towards, whereas our market snapshot gives you the minutia, the zeroed in, really double-clicked view of what's going on in the market right now so that you can make real-time decisions, okay? So let's dive into what is happening or what happened in September of 2024 versus September 2023. All right, so our first thing we want to look at is the number of new listings. You can see that September of 2024, we had 1,115. September of 2023, 1,103. So there was a difference of 12 listings. So a little bit more, but not a whole lot significant, not a whole lot of significance in that difference. And the reason this is important is because you'll hear that inventory is increasing, and you could see if you watch the market snapshot, you can see that the inventory is actually decreasing in the 7-day period. But this also shows that, yeah, inventory is up a little bit, but it's not up as significantly as it seems when you're listening to the news. So 1,115 versus 1,103 in new listings. The total number of sales for September 2024 was 931, whereas September 2023 it was 872. So there's actually more activity that happened this September versus September of last year. That's a 7% increase. And so the market activity is there. It's just we're in a seasonal, like the September timeframe, where it feels like the market might be slowing down a little bit. But we're actually busier this year, or have more transactions this year than we did last year. And if you take the difference of 931 from 872, that's what? Quick math, 50, I can't do the math real quick. It's about 50 properties, right? So 50 properties that sold versus only 12 more listings. We actually had more demand this year than we did last year at this time. So if we go into days on market, you can see that September of 2024, the days on market was 20 days. So it's slowly ticking up. So houses are taking a little bit longer to close. And again, I think that's because buyers are seeing that they have some options, so they're taking time to look around. In September 2023, days on market were only 16 days. So they were more urgent last year. This year, they're taking a little bit more time. But yeah, so the days on market have gone up a little bit. It's up 4 days in year over year. When we look at months of inventory, so again, months of inventory is what we call our absorption rate. And what that means is if you took all of the listings that were on the market right now and the current rate of home purchases continued, how long would it take for that inventory to be sold out completely? And then what we look at is the common agreement is that about a 5 to 6 months of inventory would be a good neutral market. Anything below that 5 to 6 months is a seller's market. Anything above that 5 to 6 months is a buyer's market. So if you look at our months of inventory, you can see that we have 3 months in September 2024. It did go up a little bit, but that's kind of to be expected because we're into that fall season. And September 2023 it was 3 months as well. So it's flat on that. I have an error here. It is not 1 day from 2023. It is 1 day from August. So it was flat as far as months of inventory. It's the same. And so this still is a seller's market. Even though it does feel like it's a softening seller's market a little bit, it's still a seller's market. All right, median sales price is up 11.5% in September of 2024 versus September of 2023. So that is a significant amount. I think this number, I don't have the exact number on here, but I think this number was like 720 and it was around 650. It was right at 650. So significant appreciation September 2024 versus September 23. So if you see people who are waiting for the time to time the market, if they've waited for a year, they've just missed out on 11% of appreciation. And then let's say the market does drop and it drops 5%. Well, they're still negative 6%. So, and we're going to get into that in just a minute. So median sales price is higher. Again, remember, median sales price does not necessarily indicate the value of the property that you're looking at. And I always give this example each monthly report, but I like to remind everybody of what that number means. So the median is the number that falls right smack dab in the middle of the entire sampling of all of the transactions that happen. And the reason this number is used is so that, if there's a $30 million sale and you use an average, then that $30 million sale would skew the numbers up. in an average, it would change the average and skew them higher than what was really kind of accurate. Just like a low sale would skew the numbers down. So they use the median sales price because it's not affected by the extremes, it's the middle of what happened. So the reason this does not necessarily give you the value of a property, it's just a good kind of indicator of where the buying trends are and what the markets are, is because that middle number is what we're using. So in this example, we have 10 sales here, and you can see we've got a high range up here, and then we've got the low range down here, and the middle number on this example is $500,000. And then you go to month 2, and you can see that all the sales in this number are in this level are higher than month 1. All the sales here are lower than month 2, but the median sales price is $400,000 because that's the number that falls right in the middle. So by using the median sales price, you're actually thinking, okay, then it's a 20% different. The median sales price for month 1 was $500,000. Median sales price for month 2 was $400,000. That's a 20% decline. The market has declined 20%. That means in the buyer's mind, if you're listening to the media and you're only going with what they're giving you, in the buyer's mind, that property that was $500,000 you can now get for $400,000, and that is not the case. This does not determine property value. This determines where the buying trends are. So for example, we saw when interest rates spiked and started going up, the median sales price dropped for a little bit because what was happening was the people that were buying in, they were shopping at $1 million. Well, then the interest rates went from 3% to 6%. They could no longer qualify for $1 million, so they had to shop in the $800,000 range. So their buying choices had to come to a new level. So more homes that were lower priced were selling, but they were selling at above asking price and above market value. But it looked like the median sales price was dropping because everybody was having to move into new price brackets. So that's where that median sales price can be a little bit misleading. So just want to make sure everybody understood that. All right, so what was the average list price to sales price ratio? In other words, if a property was listed at $1 million, did it sell at $1 million? Did it sell at $970,000? Did it sell at $1,050,000? What was that average? And you can see that for September, it was over 115% of list price versus sales price ratio. September of 2023, it was barely over 100%, like 101. So houses are still selling for the most part well above asking price. And that's because, sellers are getting realistic and they're actually pricing the properties appropriately, whereas in September of 2023, the interest rates, the sellers hadn't adapted to what was going on yet. They thought they could still just throw properties on the market, so they weren't getting bid up as much. So that's what's happening with the list price to sales price ratio. So I do this chart each month now because I want everybody to understand, like, if you're trying to time the market because you think the next crash is coming, that may not be the best idea. It's of course your choice to make, but you want to make strategic choices based on history. Nobody can tell you what the market's going to do. If somebody tells you that they know what the market's going to do, they are lying to you. You do not. Nobody can tell you what the market's going to do. There can be a stroke of a pen from a politician. There can be a pandemic. There can be a banking crisis. There can be all kinds of things that can really there could just be a mood change. There could be an election. All kinds of things that could change which way the market's going to do. So nobody knows what it's going to do. But what you want to do is you want to use history to try to predict what things are going to do. So you make the most logical decision, not predict, but make the logical decision. So if you look at the history since the 1940s of the real estate market, there has not been a single decade where there has been a loss of market value. Even the decade including 2008 and 2009, that decade still appreciated by 66% in home prices. So that's important thing one. There has never been a negative decade. The lowest decade was the 1990s that you had 30% appreciation. Item number two is in the last, 81 years, this does not have 2023 and 2024, but we know that there was appreciation in both of those years. Since in the last 81 years, there have only been 7 years that have had negative appreciation, in other words, depreciation. Those 7 years, we had the 1990s, 91, so negative 1%, which is not a market crash. 0% is not a market crash. 5% was the beginning of a market crash, 12% was a market crash, and 4% was a continuation. So 2007, 8, and 9, it looks like there was about, if you added all this together, about 21% loss in property values. Now, that was caused by the real estate industry. We don't have the same lending practices. We don't have the same market. The buyers that are in these houses now, they have equity. So even if people start they start falling behind on their mortgages, they're just going to sell the houses because there's equity in those houses. So this one was significant, and this is the one that everybody is waiting to happen. People that are waiting for the market crash are waiting for this to happen. But then if you go back over here, and this was a continuation, it was 4% and 4%. So 7 years we had a loss we had depreciation. 5 of those years were related to the market crash caused by the real estate industry, and then we had a negative 1% and 0%. We did have 1 year that was flat, where there was no appreciation in that year. But again, there's not been any decade where there's been a loss. So what does this tell you? This says that if you buy a property, let's say you made a mistake and you bought the property here in 2006, right? Well, all you had to do, if you add all this up, okay, so 2006, you bought this property. This is 5, this is 12, I'm sorry, 5, 17, 21, 25, 29% loss. Well, if you waited until 2016 to sell, you just didn't sell during those losses, then you'd have, around a 45% appreciation. So you'd still make 20% on your house. So the key is, it's not necessarily timing the market, it's time in the market. If you go in the market and you sell when the market's crashing, you're right, you could lose money. The odds of a crash happening are not in the favor of a significant crash happening, so that's one thing. But also, if you are in a crash and you can hold on, just hold on to the house until the time comes, and then you can sell it. You've recovered from those from that crash. So it's not in my opinion, it's not a great strategy to wait, because you end up missing out on a lot of appreciation. One other thing is, how do elections affect the real estate market? And this graph right here shows that in 7 of the last 8 elections, property values increased the following year. The only time that did not happen was in 2008, and we've already discussed that. So it's a good time for buyers to get in the market. You hear Kelly and me saying it all the time. It's a great time to get in the market, and that's because we truly believe that getting into the market, getting a property now will pay you dividends in the long run. All right, so the way the market is looking is we're still in the seller's market. It might be softening a little bit, but that's likely because of it being the fall, but it is a more aggressive, more active market than it was in September of 2023, based on the stats from our multiple listing service. All right, if you have any questions, please feel free to let us know. We're happy to have a detailed discussion with you about an individual property. And I hope everybody has a fantastic day, and we will see you next week.